like the crypto tokens that the SEC is currently going after, they exit those positions, and since they're not going to withdraw their money back into fiat banks because there are no off-ramps, the natural trade is to trade all those crypto assets for Bitcoin and then put their monetary energy into the Bitcoin network. So I think this is all fairly bullish for Bitcoin. People are trying to figure out what they can trust, and Bitcoin is the most trustworthy crypto asset. It's the most trustworthy crypto network. There is no second best.
With the price of Bitcoin soaring to just above $34,000, many investors are now taking notice. With the approval of BlackRock's Bitcoin ETF at the forefront of the crypto landscape, MicroStrategy co-founder Michael Saylor emerges as one of the most passionate and vocal champions of the world's leading cryptocurrency asset. His company boasts an impressive holding of over 158,000 Bitcoin, making it the world's largest publicly traded Bitcoin holder. He predicts that 2023 will be the year we see Bitcoin explode, and to Saylor, Bitcoin represents far more than just a means of escaping the continuous devaluation of the US dollar. He sees it as the bedrock of the entire digital asset ecosystem, a rock-solid foundation upon which everything in the crypto world has been built upon. In a recent interview, Saylor discusses his thoughts on the ongoing impact Bitcoin has on the crypto market. He believes the Bitcoin rally is not merely a reflection of mainstream adoption. Instead, it's cryptocurrency investors acknowledging the place of the leading crypto asset in the market. Saylor believes that the greater rally for mainstream investors is coming, and that time is now.
We have progressively built up a Bitcoin position up to 140,000 Bitcoin over the past 2.5 years. When Bitcoin traded from 66,000 all the way down to 16,000, we took an impairment loss. In the course of the last 12 weeks, that Bitcoin position has traded up $2 billion in fair market value. So, of course, when it's trading down, there are tax consequences and indefinite intangible write-offs. But when it's trading up, we reverse some of the tax accounting. The indefinite intangible treatment hasn't changed any, but I think the short of it is the software business is very stable and it's a cash cow, and we use it to pay our interest on our debt and to acquire more Bitcoin. And the Bitcoin itself is our belief that Bitcoin is the ultimate digital scarcity network. And because Bitcoin has been moving up about 50% a year on average over the last 3 years, the real key with Bitcoin is just to be able to hold on to it and stomach the volatility. And we have conditioned our shareholders and our bondholders to understand that we're long-term hodlers. And because everybody is aligned in that interest, we're able to weather that volatility, and we end up doing very, very well as Bitcoin recovers.
Yeah, and Bitcoin is recovering, though. We're still well off the all-time highs. We're up something like 70% since the start of the year. What do you attribute that recovery to?
I think right now there are two twin drivers, right? There's the macroeconomic concern about inflation, and as inflation takes place, people lose confidence in fiat currencies, and that means they start to realize that everything valued on cash flows is a currency derivative, and Bitcoin is not valued on cash flows. It's in a digital scarcity. The failure of the banks, Silvergate Bank, Signature Bank, Silicon Valley Bank, now First Republic Bank, causes people in the Western world to start to lose a little bit of faith in the banking system. And they remember that Bitcoin is a bank in cyberspace run by incorruptible software. So the phrase "be your own bank" has emerged as an investment idea in the United States, but it's really a matter of financial survival elsewhere. And so the combination of that concern about inflation and counterparty risk with banks is driving Bitcoin's adoption. It's also being driven, by the way, by the crypto crackdown. And as people lose faith in crypto exchanges, crypto securities, and cryptocurrencies, there's a natural migration of capital from those crypto ecosystems into Bitcoin, since it's viewed as the risk-off safe haven asset of the crypto space.
Yeah, and certainly it's being handled by regulators a little bit differently, at least right now, still being classified as a commodity, whereas the SEC is starting to look at more aggressively other cryptocurrencies as a security.
Michael Saylor believes that while some investors were initially uninterested in Bitcoin, and gravitated toward other cryptocurrencies, the Bitcoin ETF has caused a massive influx of investors to return to the dominant crypto asset. He highlights Bitcoin's position as the reliable, trusted network that stands the test of time when other assets fail to provide stability.
I think it's very, very difficult time for any bank that had a large portfolio of long-dated bonds and interest rates surging from almost nothing to 5% in 12 months, I think is largely responsible for the difficulties that the banking sector has undergone. I think for those that are acquiring and holding Bitcoin, it doesn't make a big difference. I think the real significance of these on-ramps to crypto being shut down is that as people lose faith in certain stable coins, or they lose faith in crypto exchanges, or if they lose faith in crypto asset securities, like the crypto tokens that the SEC is currently going after, they exit those positions, and since they're not going to withdraw their money back into fiat banks because there are no off-ramps, the natural trade is to trade all those crypto assets for Bitcoin and then put their monetary energy into the Bitcoin network. So I think this is all fairly bullish for Bitcoin. People are trying to figure out what they can trust, and Bitcoin is the most trustworthy crypto asset. It's the most trustworthy crypto network. There is no second best.
Saylor believes in the long-term potential of Bitcoin as an investment, despite the current scrutiny of crypto by the SEC. He says those with crypto assets are likely to trade them for Bitcoin anyways, which is seen as the most trustworthy crypto asset and network. Saylor notes that Bitcoin has been moving up about 50% a year on average over the last 3 years, and the key to investing in Bitcoin is to be able to hold on to it and stomach the volatility despite some short-term losses. MicroStrategy continues to remain the largest holding of Bitcoin in the world. Saylor remains bullish on Bitcoin and echoes the sentiment of many high-profile investors, saying that the crash of the US dollar will lead to a rally in Bitcoin. Saylor suggests investing in scarce, profitable assets that are free from counterparty risk. He notes that the global demand for a stable digital currency is growing as countries are facing currency instability. He believes that Bitcoin will thrive as a valuable asset because it's validated and supports an entire class of assets, according to Saylor. While strong nation-states may still have fiat currencies, the currencies of most countries will eventually fail. He advises against holding cash that rapidly loses 20% of its value per year, and believes that maintaining generational wealth requires purchasing desirable assets with low-cost money. What do you think about the latest interview with Michael Saylor? And when will we see the massive rally in 2023? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.